All right, today we're taking a deep dive into Fastly. You may have seen the ticker FSLY because the stock has been on an absolute tear this year, more than doubling. So we're going to figure out what's going on. We'll break down the numbers, the narrative, and the big risks to see what's really driving this thing. And that really brings us to the central question, right? For anyone looking at Fastly, you have to wonder, is this incredible rally a real signal that it's a key player in the whole AI revolution? Or has the market just gotten way ahead of itself, creating a stock that's, simply overhyped? We're going to look at both sides of that argument. And to do that, we've got a really clear plan. We'll start with the basics of the business, then we'll get into the bull case, and of course, the bear case. After that, we'll talk valuation, what's a fair price, and then we'll wrap it all up with a final take on the risk versus reward. So first things first, before we can talk about the stock, we need to get a really clear handle on what Fastly actually does. So at its heart, Fastly is an edge computing platform. Now, the easiest way to think about that is like a content delivery network, or CDN, but on steroids. See, a traditional CDN just stores stuff like images closer to you, so websites load faster. But Fastly's platform lets developers run actual code right at the edge of the network, super close to the user. This slashes lag time, which is just absolutely critical for things like video streaming, online gaming, and, you guessed it, artificial intelligence. So how does that tech translate into a bull case for the stock? Well, all the excitement, all the buzz from investors, it really comes down to one thing: accelerating growth. This is the signal that really got the market's attention. For 4 straight quarters, Fastly's revenue growth hasn't just been growing, it's been getting faster and faster. That kind of momentum is exactly what growth investors are hunting for. It suggests the business is really hitting its stride. And that acceleration really hit a high point in the fourth quarter of 2025. The company posted a record $172.6 million in revenue. That's a full 23% higher than the year before. I mean, for investors, that is just a powerful, powerful signal. And looking forward, management seems really confident. Their guidance for the full year 2026 is sitting around $710 million. Now, the key thing here is that this number came in well ahead of what analysts were expecting, which tells you the company thinks this momentum has legs. But listen, it's not just about top-line growth. For a company to be viable long-term, it has to make money. And Fastly is guiding for about $55 million in non-GAAP operating income. This is huge. It signals a major shift away from a history of losing money toward actual sustained profitability. That's a critical milestone for any tech company. So what's behind all this? Well, it's really 2 key engines. First, AI. As companies roll out AI models that need to make split-second decisions, they need that super low latency edge computing that Fastly specializes in. And second is security. Their high-margin services, like web application firewalls, are in huge demand, and that part of the business is growing even faster than the rest. This all adds up to a much healthier financial picture, which is a key part of the bull case. The company's hitting record gross margins, and it's generating positive free cash flow. What that means for an investor is that Fastly can actually fund its own growth now without having to go out and raise more cash. That gives it a ton of control over its own destiny. Okay, that's the bull case, and you have to admit, it's pretty compelling. But a smart investor always looks at the other side. So let's dig into the bear case, which is all about some pretty serious competition. Yeah, Fastly is not operating in a vacuum here, not even close. It is up against absolute giants like Cloudflare and Akamai, and that's not even mentioning the massive cloud providers like Amazon and Google. These companies are bigger, they have way more resources, and they are fighting for the exact same customers. It's a brutal, competitive landscape. And this brings up a really key point of caution. Remember that amazing 23% growth in Q4? Well, the company's own forecast for 2026 implies a growth rate closer to 14%. That's a big slowdown. It looks like that period of accelerating growth is over, and that really changes the story for investors. And there are other big risks to think about too. First, actually hitting those new profit targets, that's going to take perfect execution. Second, if there's any big slowdown in tech spending, that's going to hit them hard. Third, the stock itself is just incredibly volatile. It swings all over the place. And finally, there's always the risk that those AI tailwinds, the very core of the bull case, just don't end up being as strong as everybody hopes. So, this all brings us to the all-important question of valuation. With the good and the bad in mind, what's a fair price for this stock, and where is it actually trading today? So based on its 2026 guidance, Fastly trades at about 5 times its forward sales. Now that's a common way to measure growth companies. And for a fast-growing software company, 5 times sales might not seem totally crazy. But here, context is absolutely everything.
And this is where we see a pretty major disconnect. As of mid-March 2026, the stock was trading around $25 a share. But the average price target from Wall Street analysts was only about $13. Even a more fundamental valuation model suggests a value closer to 17 or 18 bucks. This really implies the market price has run way, way ahead of where the experts think it should be.
Okay, let's bring it all together for a final take, weighing that incredible promise against some pretty significant risks. So here's the core dilemma for any investor looking at Fastly. First, you've got the promise. This is one of the few pure play companies right at the center of the AI at the edge explosion. Second, you have the price, a valuation that has already priced in a ton of future success. And third, you have the path, a company trying to become profitable while fighting off giants in a really volatile market. So we kind of end where we started. Fastly offers this clear, super high growth story that's tied directly to the AI revolution. But it comes at a premium price, and it comes with a lot of risk. Ultimately, you have to decide for yourself, based on your own investment style, is that promise of AI worth the price of all this volatility?